Good morning, traders. It is 7:25 a.m. Chicago time. We're about 35 minutes early today. Thanks for joining me. I'm doing an early show today because of prior obligations. My wife has training today for her therapy practice, and so the training occurs at the same time as the usual show. And so I'm doing this early so that she can attend her training and then I can take the little ones to daycare and school. So here we are, a little too early, but still, the plan is the plan. We just had the ECB announced just a few minutes ago. Again, this is 7:25 a.m. Chicago time on October the 27th, 2022. It's Thursday. This is Trader Bite number 2345. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. You can see here that the Dow's holding up really well. The industrials, which have some components that have reported this morning, with Caterpillar beating by 20%. We have Southwest Airlines beating by 13.6%. We have Merck. These aren't necessarily in the Dow, but these are what's reported. Comcast reported beat by 6.67%. And a McDonald's beat by 3%. Mastercard beat by 4%. That's what's already happened today. But overall, the posture is mixed coming in. And after yesterday's action, I have some thoughts here that we'll cover. As you can see in front of you, after the markets, we're looking for Amazon, Apple, Intel as the key players after the close, and then we have Gilead Sciences as well. Just about 10 minutes ago, the ECB came out and announced its interest rate decision. The new rate is at 2% from 1.25. They raised 75 basis points as expected. The deposit facility rate is 1.5%. 1.5% in line with what was expected. This is also a 75 basis point increase. In about 3 minutes, we're going to get U.S. GDP growth expecting plus 2.5. The prior 0.6. This is Q on Q advance for Q3. And we get durable goods orders. Again, that's in about 3 minutes or so. Durable goods orders expected at 0.2%. We also get initial claims looking for 220,000. And the important component of GDP price index Q on Q advance for Q3, expecting 8.3%. The prior is 9.1. So higher on that price index is likely to stimulate the Fed to be hawkish on interest rates. Next week, next Wednesday, is the FOMC day. So there's a press conference as well at 8:45 Eastern. Pay attention if you're trading the euro or products related to Europe. At 8:45, that's in about 15 minutes or so, 17 minutes. Later today, we have some numbers out of Japan, unemployment rate, but the key release is a Bank of Japan interest rate decision, expected to remain in line at negative 0.1%. Remember, Japan's been intervening in the market on behalf of its currency and has caused some big movements in the dollar, which has moved us around quite a bit. So that's what's important today. As far as news events, there's not much to talk about other than the ECB rate decision so far, and the earnings just covered. I don't. The news flow has been pretty slow. Really, the market's really interested in earnings right now. Looking at the S&P, the S&P is trading relatively heavy, relatively, not by much, for this time of day. 252,000, expecting it to get to about, well, it's in line actually. The volume in the S&P, I was looking at the wrong chart. The S&P volume is actually in line. Looking at the overnight volume in the S&P, let's see what we have here. Other than this last half hour bracket, the overnight volume is completely in line. So I'm expecting that to continue through to the open. The market's balanced. What's going on here with the imbalance number? Let's refresh. I'm going to refresh this imbalance number here. The S&P imbalance is at plus 56%. There's 56% more volume above settlement than below is what that means. So the inventory is positive by 56%, nothing too significant. And the point of control is really hanging high versus yesterday. It's remaining up at 38.60. The overall market is accepting these higher prices. If you recall yesterday, if you were here, you'll remember that we were looking for the market to push higher, and it did. So the key target, let's switch to this chart right here. The key target up above was 38.80 and 38.90. If you're in a conversion trading chat room, when it reached 38.90, we observed that the order flow was really coming in heavy to resist further movement. We saw a pretty good supply right in here. Unfortunately, because I started the platform from home, I'd lose the MBO data, but maybe this chart here will help you see it. It's actually pretty cool to watch the order flow at yesterday's high. Come on, come on, come on. Yeah, this computer at home, it's time to upgrade. It's time to bring it into the new century here. Okay, this is my IRT based trigger chart, and if you look, the thing I want to point out here is if you look at these little dots, okay, as it approaches the high, you could see there's a lot more activity stacking, and this is where I pointed out that, hey, if you're long into this 38.90, you're going to want to lighten up. It's looking kind of heavy in terms of the in terms of participation by the offer. There was a lot of lifting in that area, but not much price progression, and so the expectation is it's likely to falter and turn over, and it did. And so we ended up pulling back with the NASDAQ, which led the market down, given that Google was down something like 7% or something like that. It's just the techs turned hard yesterday. Here's a chart I put up in the Convergent Trading chat room. If you follow the purple line, excuse me one second. If you follow the purple line, you'll see that the NASDAQ really let up. So follow this purple line. This is a percent change chart from the opening print. So we're comparing all of the indices against each other from the opening print onwards. And what we see here is the NASDAQ really leading early. You can see the NASDAQ just moving a lot harder and then crossing all of the indices to move back to zero on the day. So basically back to the opening print, bouncing and falling, and then proceeding to beat all of the other indices on the downside as well. So we ended up having this really clear rejection. So my opinion here is, for those of you who've been following the discussion, that we moved from balance down here. We checked balance value area high. We finished pretty strong. We finished right on top of this kind of upper balance that we've had. And then the next day we had zero interest on the sell side, and we immediately opened and pushed higher. So the target was 75 for this day, but the expectation is it's likely to check the other side of balance here, the value area, which is basically 38.98 right up here. Yesterday's high being 38.9750. So this has accomplished its goal. We've we've done the test higher, we've turned over, and look at how we closed. This closed down lower. This closed down lower and near the open, and so what we have is a very clear auction rejection. Caution everybody, GDP came across. GDP advance came in at 2.6% stronger than 2.4. The durables numbers came in relatively strong as well. Durable transports are pretty weak, came in at negative 0.5% versus 0.2% positive. And then initial claims came in stronger, 217,000 versus 220. GDP sales advance came in at 3.3% versus 1.3. And then the important component, the prices came in line at 4.5% as expected. That's decent for today. We may see no reaction, or may see a pop. So here's what, again, let's get back to our business here. And what we did is we tested value area high right in here, and then we came all the way back to the open. This is bearish to me. This is setting up for us to be, despite the price action being higher highs, higher lows, what we had yesterday is a point of control at the low end of the range. We didn't have a neutral day, which is actually surprising. We didn't have a neutral day, but we had a higher high, higher low, but value actually moved lower. So if we look at this chart right here and zoom in a bit, what we'll see is that Wednesday's value is up here. Thursday ended up putting a higher low, higher high compared to Tuesday. Okay, but value and the point of control shifted down with a close that's weak. To me, this is very likely to have a struggle. This is likely to struggle on the way up. So I'm expecting resistance in that 70, 75 area today. If it pushes up there, I'm expecting it to have a hard time up there. The expectation is we're likely to break the one-time framing higher this morning. We are the S&P really this morning is balanced, is completely balanced at the low end of yesterday's range. To me, this looks like a day where we're likely to break to the downside, and if we break to the downside, your targets are 3820 and 3800. Come back to the point of control here and probably rest from about 3850 to 3800. Gives us pretty decent range. If not, then we are likely to move down into the prior high at 3777. That becomes the key area to test. So you can see how this is set up on the active chart. Let's move forward. So you can see that, we've had a pretty good sweep up. This is loading. Pretty good sweep up yesterday. We had our pullback. This was scenario 1, by the way, that was on point. I expected it to stall out around 80 yesterday. Didn't expect it to actually get to the value area high of the balance, but it did. It got it to the tick, as I said. But then what did it do? It turned over. Nice little opportunity on this impulse down, pull back to the mid right there. You see that right there for a continuation. In any case, we ended up finishing at the lows with settlement at 38.41. And so the overall picture is that we closed lower. We shifted the point of control lower overall, and we've been sitting sideways. The volume profile is being loaded. We're sitting sideways, and to me, this is completely imbalanced. The profile coming in is going to look something like this, and this is completely balanced. And with a weak low, this is expected to push down from here. This is what I'm looking for. I'm looking for it to push down. So here's the volume profile. You can see it's very boxy. And to me, this looks like we're opening the door for it to start moving lower. And again, as I said, we're looking for 20, the double O from here, and potentially the 77 as an extended target. That'll be our extended target for the day. That's the primary idea. Okay, so that's what we've got today. I could draw up the scenarios, but first I want to bring your attention to the fact that I need you to vote again. You have links within the live chat here, also in the description of the video. Go to eclear.me/event-voting. This is Tuesdays and Thursdays. We want you to vote between 8:30 Eastern and 9:30 Eastern, so that we can put on these event contract positions in 5 products: ESNQRTY, crude oil, and the 6E, which really has rocked it this morning. So the survey price is probably already taken, given that the ECB has announced. So take a moment, please, to vote, and then when I get into the office later in the morning, I'll put the positions on. We'll put out a short video of the positions and what we've done. As an update on the voting, your votes on Tuesdays, we took 5 trades, all 4 hit except for crude oil. So we had 4 out of 5 wins on Tuesday's polling, and you did that. You took the votes, we put the position on, and we won on 4 of 5 positions. Let's see how we do today. Let's get back to what we're expecting for today here real quick. So the primary scenario, and I went through this a little bit. The primary scenario this morning, we're opening relatively weak. Remember, point of control down here. Open auction. I'm expecting it to respond back a little bit to the upside. I'm expecting an impulse down, and I'm expecting this thing to push lower into 3,800. So looking for 20 double O. On an extended selling basis, we're looking for 77 down below before the bounce. So that would be the primary scenario. The secondary scenario is a head fake, in that some participants took profits yesterday and it rolled over. They absorbed the earnings shock, and then we test lower. We break the one-time framing up, but we ultimately end up going neutral on one-time framing, and then we continue pull back, and then we continue to squeeze into the 3,900, looking for 3,905 and potentially 3,920 up here. 20 and 05 on this secondary scenario, a continuation of the momentum we've had. There are many indications to me that yesterday's action, although it put in a higher high, higher low, it was really an inverted hammer. Basically, on a daily chart, it looks like a high wick and a rejection of upper prices. Okay, so those are the 2 scenarios. Please don't forget to vote on the poll. Please go to eclear.me/event voting and cast your vote. Thank you so much for tuning in, and I'll catch you tomorrow, also early, again for the same reason. The wife has training at 8 a.m. Central, which is the same time as the Trader Bite, so I'll be doing the show a little bit early. Take care.